411. I'm Kevin Davitt, part of SIBO's Options Institute, and it's Monday, July 19th. Now, last week, the U.S. equity markets broke a winning streak. Big tech in particular snapped a 2-month run of positive weekly performances. Now, that weakness has carried over into today, with equities under pressure early in Monday's session. There are concerns percolating once again about the Delta variant of coronavirus. Now, the main story from a market standpoint might be interest rates. The 10-year yield has fallen to 1.22% this morning. That's the lowest level since mid-February. Now, for a better frame of reference, the 10-year yield was as high as 1.75% in late March, and we started the year with a 10-year yield around 95 basis points. Big picture, the yield curve is falling and flattening, which is generally detrimental to financials and is a broader risk-off sign. As I sit here, the S&P 500 index is lower by about 60 handles or 1.4%. The VIX index is higher by 3.5 and measuring around 22. The VIX index hasn't closed over 22 since May 19th. This week, earnings will be back in full swing. The leaders in technology are mostly slated to report next week, including Apple, Amazon, Google, the usual suspects. Now, while it's a fluid situation, the VIX futures curve remains in very slight contango ahead of Wednesday's futures expiring, July futures. Now, the spread between August and September futures is trading 50 cents wide, with September trading over. We're going to keep an eye on that relationship as the week progresses. VIX options volume is very heavy in the first hour of trade, with more than 60% of a typical day's volume printing in the first 45 minutes. We've said it before, but volatility is a constant. The rate of change will ebb and flow, but change just is. We'll see whether real change is in the air this week or if the broad market finds its footing in short order. That's Volatility 411. Thank you very much for tuning in.